So just like everybody has subscriptions coming out of their account, Netflix, Apple, whatever the case is, in today's day and era, we have Robinhood that allows us to do recurring investments. So for example, here I'm going to show you guys with like Bank of America. Let's say a recurring investment. I put the amount that I want to put in. Let's just say a dollar. Let's say a dollar. I want to start today and I want to do it every month on the 17th. I could do it every 2 weeks. I could do it every week. I could do it every day. I could do it every month. Choose my account and let it happen. And let it happen. You guys are literally paying $9, $15 subscriptions, but you're making excuses on why you can't get started. Oh, I don't have a lot of money. Oh, whatever this is. Oh, whatever that is. But you could just set up your account with Robinhood and have it coming out. And you don't have to think about it. You don't have to log in. You don't have to do anything. So, my name is Ali Malvis, and I've been on this journey of buying fractional shares and starting with very to little money, $0 to $500. Now, I know you guys see the account has a little bit more money in it, but also in this series, I want to show what happens when you have more than $500, when you have less than 25K, when you have 1,000, 2,000, 5,000. No matter what the amount is, I think you would need to start small when you're first starting out. It needs to be small because if you don't know how to manage and handle small amount, when it comes to the bigger amount, you're gonna fumble the bag. So this series is still $0 to $500. We're still buying fractional shares. Today is Monday, the 16th of March. I made some purchases the night before on Sunday, which I'm gonna go over those plays later in this video. Um, but the market is pretty much green. We have some stocks that we can buy and get into that we're down on. For example, Lowe's. We're gonna buy $1 worth of Lowe's. Reason why I'm buying $1 worth of Lowe's is because my average cost is higher than the price of Lowe's, meaning that I've bought in this stock around this price, right? So look, and it just came down. So it's like gas theory. Like if you're buying gas at a certain price and today or the next day it's a lot cheaper than you normally buy it, you would obviously buy gas, right? So here, Microsoft we're super down on. They're gonna buy some more, some Microsoft. Even though the stock is up, and normally, like I mentioned in my videos, I like to buy stocks on red days, or if the stock is red. But if the stock is still below my average cost, I I'm gonna get in. Silver, still gonna buy some silver. Eventually, I want to get out of these because these are mining stocks. Eventually, I want to get into the actual like price of like somebody actually holding the actual metals. So eventually, I'll cut those shares, but for now, we're gonna buy. Buy, get some gold, or get some copper. And we made our buys today for $1. Look at that. We're still taking things slow. We are still protecting the account, no matter what's in the account, no matter what's going on. The last purchase is copper. Get that. Boom. Awesome. So now we're going to go over our strategies of our covered calls that we did today. Um, Last night I bought 100 shares of Intel. Currently, I'm up $168 on Intel. My average cost is 46.67. If you watch my video last week, you will see that I'm doing the same thing again with Intel. Right now, I sold the cover call at the strike price $45.50. meaning that if Intel is above $45 at the end of expiration, which is this Friday, March 20th, I am obligated to sell my 100 shares at $45.50. But right here, as you guys can see, my average cost is $46.67. So at the end of Friday, if the stock is higher than my strike price, I am obligated to sell it at 45.50, regardless of where the market price is at. Okay. What does that do? That just limits my upside. But I have my gains in a sense already locked in. So my credit that I got was $3.05 per share, which is $305. So if I add that 305 to this 45.5, it's going to be 48.58 cents. $48.58. $48.58 minus $46.67 is a profit. So if this stays above 45.50, I will sell and make a profit. Let's actually do the math. Let's actually do the math. 48.58 minus 46.67, $191. So let's say Intel stays around this price at the end of expiration. I wouldn't make more than the actual underlying. But let's say Intel drops. Let's say Intel drops to $46. $46 is still more than 45. I would still make more than the underlying. When this starts to get to 49.50, that's when not necessarily it's a bad decision, but I just capped my gains, which is something you got to be okay with when you're playing the covered call strategy. Now, here's another lesson to be uh, learned. Don't chase. Like, I'm gonna be honest with you, I just chased this stock for the premiums, and it was a bad play. Bad play overall. This stock, I bought it at 24.97, and as you can see, we're like 4 hours into the market, and I could have waited, bought the stock down here, or bought it at a different price, and and then not only that, I already I could buy out of this $6-7. I don't want to buy out and waste a day. It's like almost there. I'm thinking about if I should just buy out the contract and see if this thing pushes. This thing hasn't been. This is what I'm saying. Do not chase premiums, guys. Do not chase premiums. Because right now I'm stuck in this little pickle. Um, I got into the stock, which I shouldn't have. That's number one. Number two, because I got into it and it was down, I said, hey, let me get my escape plan basically ready. Average credit, 190. Sell price, strike price, 23. 23 plus 190 is 24.90. Average cost, 24.97. So if this stock is above $23 at the end of expiration, I would only lose $7 on this play, which I was like, okay, cool. That's fine. That's fine. But now it's like, man, I could kind of cut out this contract. I could buy this contract back, only lose $7, hope this thing goes back up to break even. But I'm just gonna let it play out. This is what I'm saying. Do not chase premiums, guys. Do not chase it. If you're gonna do this strategy, it has to be on good stocks that have just been around for a very long time. Like I'm not saying this stock isn't good, but it hasn't been here for a very long time. Like look, the other stock that I did last week that I don't know why I didn't do today was Bank of America. You know, like if I bought up here, okay, yeah, I got cooked. But even during market open and all this, I think Bank of America would give me good premiums right now. Let's say I buy right now 100 shares of Bank of America, 47.13. 47.13. I could sell this one. I could sell the $46 one. 46 plus 153 is 47.53. So I'd be making $40 off that. So like there's still premium juice to be made on Bank of America. Like I should have played Bank of America. But hey, it is what it is. We made the play. We just gotta wait it out. And we wait it out. We learn lessons. We learn the value. We learn a lot of concepts. Damn, should I buy out? If I buy out too, I'm burning a trading day, and I don't want to burn a trading day just to burn. But we look like we're gonna freaking rock it up. Okay, I just let it play out. But ladies and gentlemen, that's it. When you do these cover calls, you just gotta let it play out. Because the buying back and hoping and wishing, like this thing could just come right back down. And I'm playing footsies with the stock market. So once you made your decision, just let it ride it through, and yeah, wait till the expiration, see how it plays out. Because everything is already there. Like the wins, loss, whatever, the possibilities is already just there. So thank you guys for watching. Today's Monday, so we have the whole entire week. If you guys aren't following me on all my social medias on Instagram, TikTok, it is strictly financial. And I keep you guys updated on these positions on hims and hers and Intel. Intel, I like Intel. Intel's been treating me good. We made $200 off of Intel last week, and depending how this plays out, we may make another close to $200 again. So back to back $200 plays on Intel. And if it does go down, that's okay. I like it. Because if it goes down, look, 45.50, it'd have to go down a lot right now. So it'd have to like go down another 4%. So I like it. Thank you guys for watching, and we see each other tomorrow.